Manufacturing falls again. Let's have a look. Hello everyone, I'm Florian Heise, and welcome to another episode of Heise Says. Still working through my stein of coffee, when I thought we would have a look at this latest data that has come out about manufacturing PMIs. And once again, the manufacturing sector, to no one's surprise, has fallen. So let's have a look at this release. The latest Commonwealth Bank Flash Composite PMI pointed to a further marginal decrease in business activity across the manufacturing and services sector in the final month of 2019. Weakness was particularly evident at manufacturers, which saw the sharpest decline in the 44-month survey history. The sharpest decline in the history of the entire index. On the other hand, new orders continued to rise, boosted by growth in services and new business. Companies reduced their staffing levels for the first time in 5 months. So here we go. So it'll be interesting to see where unemployment goes. We can see here, look at this. It's generally been trending down since the beginning of this, or since the data we've got here. The headline figure derived from the survey is the Commonwealth Bank of Australia Flash Composite Output Index, which is designed to provide timely indicators of changes in output in the Australian private sector. Readings above 50 signal an improvement in business activity on the previous month, while readings below 50 show deterioration. The index is a GDP-weighted average of the Commonwealth Bank Flash Manufacturing Output Index and the Commonwealth Bank Flash Services Business Activities Index. Flash indices are based on around 85% of final survey responses and are intended to provide an advanced indication of the final indices, published approximately 1 week after the Flash release. So we're getting the initial data here. So we can see here we've gone down from 49.7 in November to 49.4 in December. And its decline and a faster rate of contraction. So, before we keep going, guys, what do you think? If you're in the manufacturing industry, I can't imagine that is a surprise to anyone here. We look at some of the other data. GDP is trending down. Growth is trending down. Wage growth, well, this is now a meme. Frankly, I want to turn this into a meme, somehow put on a cup. It's just going nowhere, guys. Foreign investment has plunged. And housing approvals are trending down sharply. But just think about this. This is the biggest drop in 44 months, the sharpest decline. Output in Australia decreased for the second month running in December. The pace of reduction remained marginal, but quickened slightly from that seen in November. Falls in business activity were recorded in both the manufacturing and services sector, with the pace of contraction sharper in the former. In fact, manufacturing output declined to the greatest extent since the survey began in May 2016. And we'll just bring up some other data here to show you. You can see consumer confidence as well is heading down. If we jump here, we can have a look at business confidence as well. And business conditions are both heading down, both below the trend. The fall in output was registered in spite of continued new order growth. New business was up for the 9th month running, albeit modestly. The overall rise in new orders was centered on the service sector, as manufacturing new work volumes contracted amid reports of fragile consumer demand. And that aligns with everything else we are seeing here. Outstanding business rose marginally, but companies responded to lower output requirements by reducing their workforce numbers at the end of the year. Employment decreased for the first time in 5 months, with both manufacturers and service providers lowering staffing levels. The rate of input cost inflation softened in December, with weaker increases across both monitored sectors. The rise in input prices was the weakest since May, but remained marked. Service providers mainly linked higher input prices to rising staff costs, with manufacturers reporting higher raw material prices, particularly from overseas. There you are. Companies increased their selling prices slightly, reversing a marginal decline seen in November. Although business confidence trickled down in December, I'll start again. Although business confidence ticked down in December, sentiment regarding the 12-month outlook for business activity remained positive. Okay, so we're having a positive sentiment there for business activity. I'm slightly surprised at that one. We'll jump over here and we'll keep going. So 49.5, and this is the Commonwealth Bank Flash Services PMI here. The Commonwealth Bank Flash Services Business Activity Index is designed to provide a timely indication of changes in business activity in the Australian service sector economy as a whole. Above 50 signal an improvement in business activity on the previous month, while readings below 50 show deterioration. Services business activity decreased for the second month running in December, albeit only marginally. The reduction was recorded in spite of a pickup in growth of new business, with the rate of expansion at a 6-month high. Employment, meanwhile, decreased for the first time in 5 months. On the price front, the rate of input cost inflation softened at the end of the month, while firms raised their output price marginally following a fall in November. Now, if we have a look here, guys, we also have to remember the last job ad data that was released last month was also trending down. So it's not surprising that both the manufacturing and service sectors have reduced their workforce or haven't grown it. So we can see here it's declined faster, decline no change. The Commonwealth Bank Flash Manufacturing PMI is designed to provide a timely indication of changes to business conditions in the Australian manufacturing economy. Above 50, we've already read that. The PMA is calculated from 5 indices for output, new orders, employment, supplies, delivery time, and stocks of purchases. The PMI signaled a marginal deterioration in the health of the Australian manufacturing sector during December. The rate of decline in production gathered pace and was the fastest in the 44-month survey so far. A sharper reduction in new orders was also recorded, in spite of an improvement in exports. Firms signaled a slight fall in employment, ending a 2-month sequence of job creation. Backlogs of work decreased at a solid pace amid lower new orders. Disruption of deliveries, partly linked to bushfires, meant that suppliers' lead times lengthened at a marked pace, and that was the strongest for 10 months. So let's go over here, we can see. So, well, here you go. Look at that decline in services and look at that decline in manufacturing, guys. So services has been lower in the past, but manufacturing is definitely taken a sharp dive into the negative. So, the PMI readings indicate that the Australian economy ended 2019 on a softish note. The RBA's gentle turning point for the economy remains elusive, and the weakness in private spending evident in the Q3 GDP data looks to have continued into Q4, with a flow-on to labour demand as well. There were also some early indications that the disruptions associated with the terrible bushfires around Sydney and elsewhere were having some impact. Mr. Blythe also noted, new orders continue to rise, however, indicating a degree of resilience in the domestic economy. The rise in new export business also indicated a degree of resilience to the sluggish global backdrop. So here we have, look, what else do we have here? No, just the boilerplate at the back. So there you go, guys. A decent decline in manufacturing and services sector. Decline in employment. I think this is aligning with everything else that we're seeing with all the other data that's coming out. Particularly with the different, well, what's quite concerning is that now Sydney and Melbourne, majority of their manufacturing sectors have significantly decreased that we've seen for those cities, and their services sectors have increased. So a decline in both of these are, well, one isn't going to offset the other, is it? And it just lines up with everything else that we're seeing out there at the moment. It'll be interesting to see what the retail Christmas figures are, what the unemployment rate is next year. So guys, let me know what you think. Where do you think it's heading? Does this surprise you at all? And how does it align with all the media hoopla we're getting about clearance rates and property just booming? doesn't fill me with confidence about anything we're hearing. It seems irrational, and maybe that's just where the market is at the moment. Anyway, guys, thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and want to help us produce more content, we have a Patreon where you can make a small monthly donation. Also, Amazon and eBay affiliate links where we receive a small commission whenever you make a purchase. If you're buying crypto, we have a referral agreement with Independent Reserve where we receive a commission every time you make a trade. It doesn't cost you anything, guys, and these are great ways for you to support your favorite online creators or even your not so favorite ones. Anyway, guys, thanks for watching. Like, share, and subscribe, and I will see you all again next time. Bye for now.